Okay, welcome. Up on the stage right now we have Dan Gallagher, who is the Chief Legal Officer of Robinhood. Before joining Robinhood, Dan was a partner and deputy chair of the Securities Department at the international law firm Wilmer Hale. Dan has an extensive background of financial markets and regulatory matters, including serving as the commissioner of the SEC from 2011 to 2015. He's held several other positions on the SEC staff as well. And then we have Jamie Selway is a partner at Sofon Advisors, and Mrs. Jamie was previously head of electronic brokerage and U.S. head of equity services at ITG. So with that, I'm going to turn over to you, Jamie, and thank you very much.
Jimmy, thanks very much, and thanks and congratulations on a fantastic conference. It's wonderful to see so many old friends and friendly faces in person. It's also an honor to honor a gentleman like Tim Mahoney and his accomplishments, and to experience firsthand the verbal tornado that is Mr. Doug Sifu. So Jimmy gave Dan a great introduction. Over the years, I mean, we knew him as Commissioner Dan, Counsel Dan. He was the market-friendly SEC Commissioner now at Robinhood. I'd advise everybody that now answers to his Reddit handle, which is Danny Boy Hawks 1987. Danny Boy is a fine Irish lad. Hawks as a product of St. Joe's Prep, Philadelphia's very own, and 1987, of course, the year of his birth.
All right. Yeah. Look at this. I don't think so.
So Dan, historically in your career, you've been a policymaker and an advisor, counsel. What's it like to be on the operational side, run a business?
Yeah. First, great to be here. Tim, congratulations. One of the good guys in the industry, and I think it'd be great to share a toast with him later on. Yeah, very interesting to move into the operational side. I had a short stint early in my career as the GC at Fiserv Securities, which was a clearing firm. We were ultimately sold to NFS, and I returned back to DC. But I think I was about 32 and walked into Fiserv in the middle of the market timing late trading scandals, and had a very active Philadelphia office of the SEC. It's always great when you're in a region and you're the big fish in the small pond. And so I had to deal with that mess and get that cleaned up. And the minute we did, the corporate parent decided they'd had enough of the regulated world and sold us. So had a little taste. Coming into Robinhood, obviously, I was on the board. I actually joined the board about 2 years ago, from right around now. And so got to know the team, and got to know the founders, got to know the management team, and really liked them. And as most of you remember, in March of 2020, they had some issues, some systems issues, and that caused me to roll up my sleeves a bit and spend a lot of time with them, and came to even like them more and more. And when my predecessor decided to leave, it was the Dick Cheney hunt for the new CLO, and can't believe it, but it turned out to be me.
So Robinhood calls itself a platform. It's got a very, very different culture, than traditional brokerage. It's fantastic to see them as a sponsored STA, but it's a relatively new face in this crowd. What attracted you to the culture and the way they do business?
What attracted me to Robinhood was the mission, and people say that a lot, and they have to if they're a corporate executive, but it's real at Robinhood. This democratized finance for all is real. It's not just words up on the wall. And a lot of the decisions, when I was on the board, I was watching a lot of decisions get made that weren't exactly, best for the bottom line, that weren't the typical corporate decisions that you would make, but they were to help democratize finance. They were to help bring more people in. And so, revenues weren't always the highest goal, right? There were other things, like same low margin rate for everybody. That sort of thing. You're going, well, gee, you could make a little more, you could optimize your price at IPO, and these guys didn't do it, and really started to respect that. And then the culture, the Silicon Valley culture, was just always alluring to me. So very different from Washington, and the old Washington, it was just two different camps, right? And now because of the government, because of regulation, there's more and more time spent between the two geographies. You can see the Facebook thing this week for a prime example of that. And I kind of just thought, well, why not? Why not take a look at this? I thought the board duty would be enough, and then when I jumped in on the management side, it's weird. It's like it's warmer and fuzzier. People are really nice. The culture's terrific. It's very not East Coast. It's very not Doug Sifu.
They're even nice to Steve K.
Doug's nice. I'm kidding.
So to dig down, so Best X is this concept, talking about it here today. It's debated, it's amorphous, it's imprecise. What do you guys do? How do you guys think about it? How do you measure it? How do you put into practice these principles to benefit your clients?
Yeah, I mean, look, I'm not going to speak on the operational side, but everything Doug said, I mean, he knows his side of it, but he also knows from our side, right? We send our orders where they get the best execution. That's how the router is coded. That's how it works. It doesn't have anything to do with payment for order flow. We get the same from each one of the market makers. So absolutely right on that front. And then it's just a matter of what are the other things, benchmarking against other firms. Obviously, that was something the SEC took us to task on. And so we're constantly refining and improving. It's interesting, though, right? The shifting sands of what is Best X, right? I mean, the SEC 16 years ago with Reg NMS didn't do anything really with Best X, but said best price, right? Everyone should just be after the best price. And that's kind of been imbued in this new rhetoric coming out of the SEC. The best price, the best price, the best price. To what end, right? I mean, if Best X means you have to be a utility and make no money or let the government come run it, then that's not going to go so well, I can tell you that.
So you have 18 million customers?
22.5 active.
22,
Yeah.
Going up every week.
Just off the top of my head.
And IR guy now?
Probably since I've been here, another 500. I'm just kidding.
And how many are new?
How many?
New-
More than
new
half are
investors.
first-time investors, yeah, when they sign up.
So these newbies, how do they think about Best X? Do they care?
I can't tell you. I've had the conversations with them. I think
Doug could, but
they
maybe-
care a lot. They care a lot about no minimum balance, commission-free trading. They care about that. That's why they're in the market now. And guess what pays for that? Payment for order flow. I know you're going to get there. I'm not trying to segue us, but that's what they care about. They care about ease of use, right? They care about things written in a language they can understand, and they care about fees, and they care that the barriers that had existed for decades historically in the markets have been taken out.
But the idea that they're casual about it or don't care about it or aware of it, you would just
No, the
you would
idea that
reject
they're stupid is really insulting, right? Like let's just break it down. Like that's what they're being told. You are too stupid to be in these markets. We're going to protect you from that, from your own stupidity.
Eternal
And I got to tell you, every one of them I meet, and I meet them all the time. My roofer is a huge customer, he and his sons. I mean, he gets so mad when he hears the nanny state coming out to protect him. He's like, it's been a revolution in his life. He's watching CNBC and reading the Journal and very excited about the financial markets. So I just find this notion that just because they're new investors, right, just because they weren't served before, that they need to be protected in a way that pretty much keeps them out of the market.
So speaking of the nanny state, let's touch on that. You had a term, comprehensive review.
Was it comprehensive?
Comprehensive review, something review.
Something?
Well, we're getting one now. So Chair Gunzler's doing one with a focus on retail. So, so PFOF, right? Doug talked about it exhaustively, central to your business model.
Yeah.
We talked about the problems of a ban. What do you think? Two questions, right? What do you think will happen? More disclosure. And then secondly, if a ban were to happen, how would Robinhood change? How would you guys pivot?
Yes, I mean, I said it on CNBC the other day. In my heart, personal opinion, having been in the belly of the beast at the SEC, when they do the hard work that's required to do, they can't just go out and give speeches and ban PFOF, right? They have to go through a APA-compliant rulemaking process here. When they do that, and when they do a cost-benefit analysis, they're going to see data. They're going to see Doug's data, professors everywhere coming with data. There's data everywhere indicating that payment for order flow is very good for retail investors. And so I think that, coupled with the fact that it's been recognized as a potential conflict and regulated as such for 40 years by the SEC, it's going to put them in a pretty tough spot. So if they proceed, I'd be surprised. I actually think after all of that, a rational trier of fact is going to look at it and say, this is unwarranted. So I hope they don't do it. Enhanced disclosure makes sense. It always makes sense, right? With technology, the way it evolves, I mean, a disclosure rule from 10 years ago is already obsolete, right?
Yeah, I mean, 20 in the case of 605.
Right. Yeah. So we're happy to engage that. I mean, that's the beauty of Robinhood. We have the technology, right? We have 1,000 PhD engineers sitting around. They can code this. They can give vibrant disclosure. They can make sure people understand it. And when it's 38 cents or whatever, we'll see, how much that affects investor behavior.
And were PFOF banned? You have options? I don't know if you.
I'm not going to go there.
Okay.
Yeah.
And then one last question on it. Have you heard any discussion on options PFOF? Or is that sort of off? Is that
No,
sort
the
of done?
focus is definitely on the equities markets, which is, again, it's the SEC, right? You have CNBC sitting on the floor of the New York Stock Exchange
Sure.
or NASDAQ. Everyone talks about the equities markets. That's what we did all the time. I think that was part of one of the 80 speeches I gave on this stuff, that, we didn't touch the fixed income markets. And if you looked at those notionals back then and now today, because of Fed intervention, dear Lord, how many trillions, and corporates and munis fall right under the SEC jurisdiction. Jay Clayton's a good friend of mine. I think he did more than any chairman, and it's still in the Stone Ages.
But on the options side, it would require a lot of rulemaking involving exchanges, radically different than
Yeah, I don't know
grabbing a
what's
couple
wrong with that. I
wholesalers.
mean, I think the options exchanges are functioning incredibly well. So I think the equities markets are functioning very well. So.
Well, one aspect where they might not have, right? So the GameStop event last January. Let's talk about the DTCC. We all sort of got a lot of exposure to its, somewhat archaic Byzantine processes for margining and clearing. You guys have been pretty out loud about what should change. You want to spend a moment on that
Sure.
and why and where you see sort of that discussion headed?
Yeah, so I guess they were on earlier, so I'm sorry I missed the panel. I know what was said there, but look, the move to T+1 makes a lot of sense. When I was on the commission, I still remember the staff coming up, it must have been 2015 before I left, and talking about T+2, and what do you think about this? And I was just saying, no, I'm not interested, right? Come in with something shorter, come in with STP or T1, because the minute we do T2, you guys are going to leave the playing field for 20 years, right? And I understand, I think when Pivovar and Stein did it, made perfect sense. They had to find things to work on, and it helped, and it drove efficiencies to go T2, but they did want to leave the playing field, let's be clear. And I think January 28th was just an illustration of how that can impact the markets in a very real way. And I think DTC's honestly taken a great leadership role. I have no complaints about their response to this, and Bodson, I think, is a terrific guy. And, I think it's unfortunate that it took a January 28th to get us there, but it sounds like they're making good progress. So I'm supportive of that, and, I'm a same-day guy, and maybe not real time, same day, and I think...
T+0, not real time, real time later.
Yeah,
Make
real
that
time
change,
later, we
right?
get there, right? Well, or just allow for innovation. I'm going to toot your horn here, right? Blockchains with smart contracts can do real time, right? So if we can get the money side of that together, if we can give relief to blockchain clearance and settlement, Paxos is doing a great job.
Yeah.
I think that's the way to get there. What we saw, though, let's put aside clearance and settlement, the interaction of the 2-day settlement cycle and 15c3-3, right, where we were 100% margin on these meme stocks, initial maintenance, 100% margin. You had to pay cash. You wanted it, pay cash. We took your cash, and under the rules, we put it in the lockbox. Sound like Al Gore? The lockbox.
Yeah.
We're going to put it in the lockbox. Wait till it's cleared and settled, right? We can't touch it, but it's all cash. And the idea that we present some risk to a clearinghouse, right, that we're going to go under when we have the customer cash sitting in a 3-3 account. And I had to explain to members of Congress, like red-faced, angry members of Congress, why didn't you just take this money and bring it over and put it into an SEC? And I said, well, I would love to. Can you call Mike Macchiaroli? Can you add him to this Zoom call? We'll see what he says
There's
about
probably a panel for a different time, but you were probably at the SEC when they blew out the look-through between the DTC and the NSCC.
Right.
Massive margin call, unintended consequences
Right.
that you could look to that
Right.
and save the industry.
Right.
Probably.
Well, and it was another learning lesson too of DTC doesn't know our house margin requirements. They're not hardwired. It's not communicated in real time. So when you sit and you talk to them and say, guys, it's 100%, right? Haircut me on ACH or something, but that we were getting upcharges, special volatility charges on 100% cash positions. It didn't make much sense. But in the end, honestly, I'd give them again the fact that they properly exercised their discretion for us and the rest of the industry on the special charges. They did a good job. They had a hard decision to make. They did a good job.
So Chair Gensler and actually Commissioner Lee earlier today have talked about too much concentration in wholesaling. Now, we heard how good of a firm Virtu is. Their competitor, Citadel, above 50%, getting some attention. How do you guys think about that? Are you worried about it?
We don't care. We like I said, we set off that order router. It goes to where you get the best acts. I think Virtu and Citadel, amongst the pool, they've built better mousetraps. They've put the resources in. It's expensive stuff, right? The volumes are huge. right? And they're running it. They're not going down. They didn't go down the week of the 25th. They kept accepting the order flow, which is huge if you think about those volumes. Historic, beyond historic.
So in your view, 50% market share, that indicates performance.
Yeah, if you're going to resource building a better machine to provide better executions, you should win market share.
So Doug mentioned the Twitterati, and I got to ask you, what's this thing about Vlad and Ken Griffin? They don't know each other?
They've never met, never talked. They were in that House hearing, the only time they ever met.
You know Ken.
I know Ken, yeah.
Joe McCain.
I know Joe McCain.
John Baglia is running around here, so.
Yeah.
Okay, so.
Yeah, I know those guys really well. And the notion, again, especially the week of the 25th, this latest round of stuff, you guys were talking to Citadel. Of course you're talking to one of your major market centers in a week of historic volatility. We're talking to Virtu. We're talking to everyone. Are you going to be up, right? Are you going to take this? What rates, do we have to change the rates? I mean, totally commercial, normal things to be talking about with an important counterparty.
Yeah.
The idea of collusion with a hedge fund to stop, it's complete bullshit. I'll use Doug's word, bullshit.
There we are. So, this is your word.
It was, Doug, to be fair. Come on.
So the SEC recently came out with something. They're going to look at digital engagement practices. Sounds a lot like gamification.
It's like DDT or something, right? Like it's
Agent Orange.
kills mosquitoes.
Sounds bad.
Kills mosquitoes. Yeah.
So is that something a regulator should a regulator have a view, be it FINRA or the SEC, on how platform user experience? Is it an appropriate one, and then two, how would they practically do it?
So look, take a step back. Is it appropriate? For sure, right? I mean, these firms, we are interfacing with retail investors. Retail investors are the holy grail of investor protection at the SEC. I get it, right? That they should be thinking about this. Should they be looking at DEP or gamification, whatever they want to call it, because of January 28th? Hell no. Right? I mean, the ghost of Rahm Emanuel is coming out. Yeah. They're not letting a good crisis go to waste. They realized we didn't collude with a hedge fund or hedge funds, so they pivoted. Oh, let's talk PFOF. Let's talk gamification. That's just crap. It's a false narrative. But they can do it. They have the organic authority. FINRA's looking at it. SEC's looking at it. We'll see where, when I was there with Mary Jo, we moved broker-dealer regulation to FINRA effectively. The SEC retained the authority, don't get me wrong, but FINRA really took over because the number of registered investment advisors was going through the roof. We had no resources, so we moved the resources to the advisor side, and we leaned on FINRA more. So interesting that both agencies are so actively looking at it. It is appropriate to look at. There can be some bad activity, right? I mean, if folks are trying to manipulate young minds with prompts, and if they're trying to recommend securities but claiming they're self-directed, then hell yeah, it should be looked at.
So the idea that things like suitability, things like churning, these evergreen principles, they still apply.
Yeah, they still apply.
You just make sure that they're not.
And the regulators just need to catch up to the technology, right? But that's the way I would, if I was running the place, look at it. Like maybe we need to take a look at our old rule book because of these new technologies. Arthur Levitt did this. I think, I don't know if Tom Selman's here. His comment letter on this was really great. But he referred back to like a 1999 Arthur Levitt speech on internet brokerage. And it was like, we're not here to pick winners and losers. We have to protect investors, but we need this technology to thrive. And it was like, God, I never thought I'd wish for those days. But yeah, it seems that's been lost, and it's more of sort of this nanny state first type. We need to insert ourselves, and somebody's acting in a bad way, and so we need to insert ourselves instead of just recognizing that the rule book's old.
So thinking back to those days and challengers, Wall Street fancies itself big supporters of competition and innovation. Vlad Tenev, your CEO, did a fantastic journal editorial basically saying, look, some of what we're feeling, or some of the ways in which we interpret some of the policy direction is sort of protectionist. We're getting pushback because we're new, because we're servicing a client segment that hasn't been done, but because we're innovative. Yeah. You expand on any of that?
Yeah, I mean, you get to the point where if you believe in your mission and it's effective, I mean, people want this product. The numbers bear it out. They're getting involved in the markets. Most of them are buy and hold. Over half of our customers buy and hold. Very small percentage, like 13% trade options, 3% or less program day traders, right? All these other statistics are blown out of the water when you look at the real on the field statistics. And so I think, when you're us and you're looking at it going, we think we're actually doing a social good. Yeah, are we making money? Yeah, we're making money too, but this is a social good. These folks are in the markets. The best way to learn, obviously, is to be in, right? And the best way to get in is to have barriers broken down. So we've done that. And now what you're getting is, well, payment for order flow, and it needs to be looked at, and DDT, and all these other things.
So rehash market.
Yeah,
market
you're like, well,
structure
hold
debate
it. Are you saying, like, do you not like us, or do you not like these investors being in the market? I mean, that's actually a really important question to ask. Do you just want them to go back, get out of the markets?
Yeah.
Right? Because if you get rid of payment for order flow, Doug said it, I got to turn the machines on every day and pay people. How do I do that, right? Do I have to charge them a commission? It's going to come out of the corpus of their investment now. There's going to be no time value to that over the years, right? If they're long-term investors, which a lot of them are. Do you really want them in or not? And I think the regulators have to get their heads around that question.
So to that point, I want to pick up on two things that came up in the conference earlier. The environment, right? So 22 million souls, half of which are new. We heard earlier from the one from SIBO that they think the environment's here to stay, that this retail environment, this is not about work from home. This is something a bit more permanent. What's the Robinhood view?
Yeah, well, we hope so. And you can see the competitors coming out of the woodwork, to get some of our activity, our customer base, to get some of Doug's, right? The smart money is coming out to kind of take part of this continued rise. Again, without bad policy intervening, I think it's here to stay. But there's the potential, right? If you want to take away the revenue source that pays for it, if you want to dumb it down because you think it's gamified or it's too pleasurable, right? It's just too enjoyable.
Yeah.
Let's go back to a DSL line E-Trade account from '99, and then you can do self-directed brokerage. Well, then I think we're going to have problems.
So to Doug engage in a little myth busting, how do you react to this idea that your order flow is inaccessible to the institutional investor? That sort of it's somehow partitioned off, certain destinations, they can't interact with that. Is that your experience? Think that's right? Or do you leave that to the wholesalers?
Just leave it to the wholesalers, right? I mean, that's our choice, was to decide how do we get best execution in this current market structure. And we've made the decision, right? We're out to the market centers that give us the best X, and it's the wholesalers.
So I want to touch on crypto a bit. I think a lot of people were fascinated when they saw the S1, how relevant crypto crypto was.
Yeah, right, yeah.
A lot of Dogecoin.
A lot of Doge.
How many of your clients, how relevant is crypto? How important is crypto to your clients?
When I started, so May of last year, not very, I would say. I mean, it was a small but vocal minority of the customer base, and it wasn't a big revenue source. It wasn't an overly important product, I would say. Obviously, the brokerage was. That all changed this year, and that's why you saw those numbers in the S1, right? The end of the first quarter, all of the second quarter, the numbers just went through the roof. 60% of our customer base was buying or selling crypto, in the second quarter.
So operationally and technologically, is this something you guys can do in-house? Do you have partners? How do you think about that?
We run it in-house, and then we use market makers also there on the execution side. It's different, as everyone knows, right? You don't have an MBBO, you don't have the same structure, so a lot of it, you're just trying to put together the best possible package that's, the safest, most reliable platform for the customers. And, we had our foot faults there along the way, right? Just because the volumes got so huge. But we think we've built that out. The resiliency is way better now.
And in terms of what your clients want, I mean, do they want a user experience with everything? Crypto trading, so stock trading, payments, banking. So
yeah, that's the plan.
And so do you think more brokers will enter?
I don't know if they can. They want to, right? And everyone's kind of doing a little bit of this, a little bit of that. 22.5 million is a pretty significant piece of the U.S. population, and you get them using the platform as a money platform, right? Not just a crypto or a brokerage platform, and depositing their paychecks and doing things like that. Well, that's we got a pretty good start on that.
So let's talk a little crypto regulation. So we think equities is pretty well and goofy these days, but it's a real gong show over on the crypto side. How do you there's jurisdictional problems. Are these constraints to building a business? How do you navigate them? How do you see them being resolved? Does it require legislation?
Yeah, I mean, regulatory ambiguity is always a constraint. The unknown wasn't enough for some folks, right? I mean, there's so many platforms out there, and so there has been a proliferation even with regulatory ambiguity. What we have now, though, is much different. It's like intense ambiguity, right? It's Chair Gensler, and I think he feels probably, I'm just guessing, he hasn't told me this, but I think he feels like Jay Clayton did. When Jay walked in and saw all these ICOs, I mean, his hair went on fire. He had all these grand plans. Every SEC chair, when they get in there, has grand plans to do a million things, and then they get punched, like the Mike Tyson line. Yeah, they get punched in the face, and I think the punch in the face for him was all these illegal ICOs, right? So he spent all of his time trying to clean that up. Gary comes in, and he's seeing trillions of dollars of interest in this. He's taken a different tact. I mean, he's going at the platforms. He's going at is it a security issue? And it's pretty aggressive.
He's going at the platforms as an enforcement matter, but as a policy matter, he's not defining it.
Right.
So he knows it when he sees it.
And maybe because of that, the conditions are becoming ripe for legislation, right? Whereas before, there was that thing, wasn't that important to anybody, and now it's building up to a head, and so maybe he'll get legislation. It'll be interesting to see what it is.
So I think, Jimmy, I don't know if we have any questions from the audience or give people an opportunity. Maybe not. Anybody? Anybody? Dan? Doug? Steve K? I got a lot to say. Asked and answered.
Sifu.
Well, I'll ask a question. I mean, do you think, as on the digital assets in the crypto space, I mean, can you get regulatory clarity with the current regime that we have right now, with multiple agencies kind of chiming in here? I mean, you just need a little bit of clarity, or do you need like a whole brand new regulator just to do digital? I mean, just like what's the level of clarity that maybe Robinhood or other firms like yourself are looking for now, and is it possible to even get that?
Yeah, it's interesting because to me it harkens back to '08 and OTC derivatives, right? It kind of feels like that. And what did we get? We got Title VII, right? So it was kind of like, the geniuses went back and said, oh, let's lay equity market structure on top of an OTC market and see how that goes. Some love it. I know McCain's here somewhere. Some love it. To me, it didn't make any sense. So I'm loath to say you need legislation, Jim, but quite frankly, you need some sort of legislation. I would hope that it wouldn't be a Title VII-like take of let's bring the most complicated features of existing market structures to this, and it would be a more simpler, let's get some basic oversight, some basic registration category maybe or something else. Reporting, right? And that's basically what you need. That's all we needed with derivatives, by the way. Geithner was already halfway there on his private sector efforts before Title VII came in and upended everything.
So maybe just to pick up on Jim's question though, who's the logical regulator to do digital? Is CFTC, SEC, banking, or is it none of the above, new one?
It's kind of like Shad Johnson stuff, right? I mean, CFTC, institutional markets. I know. I see Jim Angel fainting. I'm not saying bring Shad Johnson. I'm saying it's the same kind of issue, right? It's neither institutional nor retail. It's both. So I don't know. I don't know who's best, but I think if you bring the SEC in with this investor protection, that's just nanny state. Like it'll smother everything. Maybe the CFTC, would take a more institutional approach to it and more principles-based approach, which I think wouldn't kill the market.
And I think Commissioner Lee touched on it earlier. This is a global market, sort of. It's already out of the goose. So we have to accommodate that.
Yeah.
So last question. 2 years from now, hopefully the great return holds, and we're sort of here in DC, STA, having these chats. What's different about Robinhood? What's different about the industry? And for you, most importantly, what's different about Washington?
2 years. So okay. Well, what's different about the industry and Robinhood? It's related, right? We're about to go through, as you said, Chair Gensler, without using the word holistic, has embarked on a holistic review of equity market structure.
Holistic.
Yeah, remember that? Some smart guy said that years ago. But we're there, and it's going to change, right? And when these things happen, somebody's ox gets gored. So we'll see how it all plays out. But there will be at least proposed and potentially uncertain reforms 2 years from now in the markets that'll impact everybody, Robinhood included. And we'll adapt. You know, I'm not worried about us adapting, and as we grow into other areas and diversify our revenues and things like that, I think, you know, we'll be absolutely fine. I hope we're well on our way further down the line of becoming, you know, the money app for our customers. DC, I think, I don't know if you've had prognostication already today. I think I was looking at the Quinnipiac poll as I was sitting there not listening to Doug, and it said Biden has a 40% approval and a 53% disapproval. We'll see how long that sticks around, but, you know, assume that next year we have a change in probably both houses of Congress. I would say definitely the House, maybe the Senate. That'll change things a lot. You know, we lived that in 2011, right, when Republicans retook the House. That impacted things greatly at the SEC too, right? The oversight was pretty intense. You know, the accountability level went through the roof just with the House. So if you have the Senate too, I think it'll be pretty intense. So I think that'll slow things down, calm things down. That's what it's supposed to do, by the way. So I think that'll be a good thing from a regulatory policy perspective. And then it's, you know, leading into 24, we'll see what happens. Unfortunately, now we're in this state where we run our markets, if not the economy, every 4 to 8 years. And we change everything afterwards, you know. And that's not a good way to do anything. So I hope for better. We'll see.
Slower and calmer sounds pretty attractive right now, and we will now let you guys get to drinks. We won't stand in the way of this group and the terrace. So please, thank you, Dan.
Thanks, pal.